You have spent 15 to 20 years building your 401k. Now you are planning to return to India. What happens to that money? How is it taxed? And what can you do to keep more of it? This is the guide most NRIs never get. Here is the uncomfortable truth. Your 401k was built with pre-tax dollars in the United States. The IRS has a permanent claim on that money. It does not matter that you now live in India. Every time you withdraw, you owe US federal income tax. And depending on your state tax too. There are two types of retirement accounts. Traditional 401k and IRA. Contributions were pre-tax, so withdrawals are taxed as ordinary income. Roth 401k and Roth IRA. Contributions were post-tax, so qualified withdrawals are completely tax-free. This distinction is everything when you retire to India. If you have a traditional 401k and start withdrawing heavily after moving to India, you could be pushed into the 32 or 37% federal tax bracket. On a $500,000 corpus, that means withdrawing your entire balance could cost you over $150,000 in US tax alone. Now here is where it gets complicated. India also has an income tax system. And once you become a tax resident of India, the Indian government may also want a piece of your retirement withdrawals. This is the double taxation trap. And most NRIs walk right into it. But here is the good news. The India-US Double Tax Avoidance Agreement, the DTAA Article 20 specifically covers pension and retirement income. Under this treaty, US-sourced retirement income, like 401k withdrawals, is generally taxable only in the United States. India cannot tax it again. But you have to claim this treaty position explicitly. It is not automatic. Now here is the strategy most returning NRIs never use. It is called RNOR, Resident but Not Ordinarily Resident Status. When you first return to India after being an NRI for 9 out of the last 10 years, you automatically qualify for RNOR status. During this period, which lasts 2 to 3 years, depending on your specific residency history, your foreign income is completely exempt from Indian tax. That includes 401k withdrawals, US dividends, rental income from US property, all of it. Smart NRIs use the RNOR window strategically. If you plan to do Roth conversions, converting your traditional 401k to a Roth IRA, the ideal time is during your RNOR period. You pay US tax on the conversion, but India cannot touch it. After your RNOR period ends and you become a full resident, all your future Roth withdrawals are tax-free in both countries. Here is the complete strategy framework. 1. Do Roth conversions before you leave the US while you are still in a lower tax bracket. 2. Use the RNOR window in your first 2 to 3 years in India to withdraw or convert as much as possible tax efficiently. 3. Always file DTAA Article 20 to prevent India from taxing your US retirement income. 4. File Form 8833 with every US tax return to formally claim your treaty position. One critical warning. If you withdraw from your traditional 401k before age 59 and a half, you pay a 10% early withdrawal penalty on top of regular income tax. On a large balance, this can be devastating. Plan your return date around your retirement account age if at all possible. Or use substantially equal periodic payments under IRS Rule 72 to avoid the penalty. One more thing. At age 73, the IRS requires you to take required minimum distributions from your traditional 401k, whether you need the money or not. If you are retired in India by then, these RMDs will be taxable in the US. Plan for this in your long-term cash flow projections. So here is the smart NRI plan to protect your 401k when returning to India. 1. Convert as much traditional 401k to Roth as you can before leaving the US, especially in lower income years. 2. Use your RNOR window to complete conversions or take larger withdrawals tax efficiently. 3. Always file the DTAA Article 20 treaty position to prevent Indian taxation on your US retirement income. 4. Never withdraw before 59.5 unless you have exhausted every other option. Planning your return to India? Run your full financial scenario on Breather. Free on the App Store and Google Play. Link is in the description.